Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsarthi. And in this week, we talk about the illiquidity of floating rate bonds. Uh, uh, but before I start the topic, uh, please do not forget to sign up for our webinar on how to value or price floating rate bonds, because this is the biggest issue in for investors in issuing floating rate bonds. In the primary market, at least the rate is there, but in the secondary market, you are not able, no investor is able to price it correctly, and that prevents them from investing in the secondary market. And this is also preventing the bonds from trading in the market. So that is why floating rate bonds become illiquid. And in this webinar, or this is on Saturday, the 26th March at 11 a.m., we talk about the whole pricing. How do you price a floating rate bond? And maybe that can give investors, financial advisors, and fund managers and other wealth managers a pretty good insight into floating rate bonds. Now, into the pricing of floating rate bonds, and then it will also help them to take investment decisions in floating rate funds and floating rate bonds. So you can participate in the webinar by clicking in the link. The registration link is given in the description here, and all you need to do is click and pay up rupees 500 plus GST for signing up for the webinar. It's going to be a very interesting session, and please do sign up for the webinar. And coming back to today's topic of why are floating rate bonds illiquid? So, like I said, when in floating rate bonds it cannot be priced, then there is a very strong resistance for investors to invest in bonds because they don't know what price they are investing in. So this makes the floating rate bonds illiquid. Now, why is pricing difficult? Obviously, I'll be taking the full explanation in the webinar on Saturday, the 26th March at 11 a.m. But just I'll give you a brief on why the pricing is very difficult, because floating rate bonds are benchmarked to the interest payment is based on a benchmark rate, and the benchmark rate is not a fixed rate but a floating rate. So, for example, if a floating rate bond is benchmarked to the repo rate of the RBI, okay? So RBI repo rate is 4%, and RBI or typically increases or decreases the repo rate depending on the economic conditions and the need for increasing or decreasing the repo rate. Now the question is, can anyone forecast? Can the market forecast where this repo rate would be in 2 years' time, or 3 years' time, or a 1 year time, or a 4 years' time, or a 3 year, or depending on the maturity of the floating rate bond, and whether the forecast is right or not. Now there are many. The best forecast is obviously where the government bond yields or the swap yields are trading, but even that may not be technically correct. And as we all know, the RBI has resisted from raising rates for the last many months, despite inflation shooting up, and they're still maintaining an accommodative policy. So if somebody is invested in a floating rate bond, say for 2 years or 3 year maturity last year, then they are earning very less interest rates on the bond, and that is hurting their returns. Now take the government bond floating rate. So there is this government bond which the RBI, which the government issues because they believe that when interest rates are uncertain and the market is resisting options, then you have the GOI. One of the bonds that is frequently issued is the Government of India floating rate bond 2028 maturity. Now, surprisingly, the way, if you see this table here, the way the yields have moved. So the cutoff yields. So that in last October, in October 2021, it was 4.04%. But in 28 Jan 22, in just 3 months' time, the cutoff was 4, just because they invested in this floating rate bond uh, when it was 4.04%, and the last auction cutoff was 4.91%. So clearly they are getting higher interest rate because the interest rates are anticipating a RBI rate hike. But having said that, if you take the price movement, which is very surprising because the prices have actually come down. The first issuance was at 100 rupees, and then the last issuance was at 98.7. So somebody holding this bond in October at 100 rupees is earning higher rates, but actually, if they go to sell the bond, they are earning lower rates. Intuitively, the bond should be pricing higher because interest rates are going up. But this is not happening and it's flummoxing markets. And many mutual funds that have schemes that have invested in this floating rate bonds or many traders, etc., are facing a huge problem because their funds are not giving any returns because the fact that even though the interest rates have gone up and the prices have come down, and this is hurting again market sentiments, and the market clearly is not very sure about what to do. And this is clearly due to the fact that the pricing itself is a big issue in floating rate bonds, and the market really does not know how to price it. And this is hurting the whole floating rate bond market. So let's discuss this on Saturday, the 26th of March at 11 a.m. I will show you how the whole pricing is working, and you'll have a very fair idea on how to price a bond, at least theoretically, or are we using a practical example actually, but in terms of using market curves, etc. But in terms of market pricing, there is a huge difference between the pricing that we can arrive at. And that's clearly because of the fact that the bond is illiquid and carries a very high illiquidity premium. So all this we will be discussing. And given that interest rates are going up, there is a lot of interest in floating rate funds and bonds, and it is a good time to attend this webinar. So if you've not downloaded a Quick Invest by INR Bonds app, please do so because here you get the best bonds to invest in this current uncertain situation scenario. And it's an in-app investment process, the most easiest for an investor to invest through our app or a financial advisor to look at the bonds and recommend the bonds to the client and take and let them invest through our app. Thank you very much for listening in, and do not forget to subscribe to our YouTube channel and also press the like button.